Welcome back to the channel, guys. We are still in the grips of an inflationary regime playing out across Forex markets because of what's happening with the price of crude oil. And in today's video, I'm going to show you the exact pairs which are at the top of my watch list heading into next week for high probability inflationary regime setups. And I'm also going to show you the exact places where I'm looking to buy and sell those pairs next week. And this is going to prepare you for next week so that when these setups materialize, you will be prepared and you can act on them without hesitating. So for those of you new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And if you want the 6 core setups that we trade day in and day out with members, you can find them in the free strategy guide in the pinned comment and the description below. And this stuff is not theory, guys. This is real practical stuff. We're up to nearly 1,000 of these setups sent out to members. And we currently have a win rate of over 75% and over 400% returns generated with those setups. So a quick look at a couple of the key things I want to show in today's video. We're going to look at the dollar followed by the US dollar pairs. And there are some good setups in the US dollar pairs because, of course, when crude oil goes up, rates in the US go up and the US dollar tends to strengthen. So I am looking at US dollar long setups primarily heading into next week. We're then going to look at Bitcoin, Ethereum, and there are technical patterns to the downside which have formed, and I'm going to show you what those patterns are, and I'm going to show you the technical targets for those patterns in Bitcoin, Ethereum. Then we're going to look at the portfolio selection using the quantitative analytics to find the high probability setups in the non-US dollar pairs. Now, this is good because next week, the inflation regime that we currently have is benefiting currencies like Australia, the Canadian dollar, and of course, outside of the US dollar pairs, there are some really good setups in those pairs next week. I'm going to show you those in today's video as well. And gold, silver have both broken down. I did highlight the breakouts to the downside last week and they played out really nicely if you watched last week's video. And crude oil, of course, dominating the markets, and pretty much everything currently is around this big rally in crude oil that's driving moves across financial markets. So that's what we're going to be looking at in today's video. And as always, everything is timestamped in the description and the pinned comment below for you. Okay, so let's go now and have a look at the dollar index because we are seeing a major reversal taking place in the dollar index. And just before we do that, don't forget, guys, if you get any value out of these videos at all, be sure to like, share, and especially to subscribe. Really helps the channel when you do that. And a big thank you to everybody who does that on a regular basis and all of you who have subscribed to the channel so far. Okay, so if we pull up the dollar index, you can see here a couple of things that are really worth noting. Last week, we bounced at the top of the range, and this was a significant breakout to the upside because it was a monthly double bottom. And of course, we have that catalyst in crude oil to assist in the breakout, the upside breakout of this major technical pattern. And if we drop down to the weekly, going from the monthly to the weekly, you can see we closed above the 50-period moving average. So what this means is we're probably making our way to the 50-period and 20-period moving average in the monthly. And because the price of crude oil is going up, this is dragging the dollar higher, but markets don't move in a straight line. And so what I'm looking for next week is I would like to see this actually pull back, because very often when you close on the other side of a moving average like this, here's a really good example. Notice how we close in the 1 hour time frame above the 50-period moving average, and then we attempt to reclaim it down here. So that's what I'm looking for this week. I'm looking for the dollar to come back down, attempt this week to reclaim that moving average, and also a potential retest of the daily moving averages down here. And as the dollar sells off, what we're going to see is any sell-off in the dollar is going to open up an opportunity as the dollar weakens in something like EurDollar, which we're going to look at next. We can look for EurDollar to push into the sell zone and also into a key area of resistance, something like this. We're going to look at all of this when we look at EurDollar as a pair. But that sell-off into the moving averages and the kind of daily bounce, that's the opportunity I'm going to be primarily looking for in the dollar pairs. So I am looking for the DXY to make its way down and retest this area and attempt to reclaim this 50-period moving average in the weekly time horizon next week. And any kind of pullback in the dollar is going to be an opportunity, in my opinion, to buy the dip. And so buying US dollars next week is a theme that you will see is part of many of the setups that I'm going to show you in today's video. Okay, so pulling up EurDollar first of all on the multi-charts here, because you can see a very similar kind of scenario in the other direction to the DXY. EurDollar basically mirrors the inverse of the DXY. But again, notice this over here in the 4 hours. Notice how we break above the moving averages and look at this attempt to reclaim them. So this is actually a very positive sign on the 4 hour time frame. And I anticipate another attempt up here to reclaim these moving averages on the weekly time horizon. So that's next week. And this is likely going to push the daily back towards the 50-period moving average over here. Now, in previous videos, I highlighted the 1.17419 as the breakout level. We had a really nice breakout down below this level when we had that catalyst. And what you'll notice when we jump over to HedgeDash and look at the volatility, you can see that this prior breakout level is sitting right at the sell zone next week. So if we push into the sell zone through these moving averages and we retest the underside of the breakout, this is where I'm specifically going to be looking for a short in euro dollar next week. So if I pull up the euro dollar chart in HedgeDash, you can see the volatility areas for this. So when we push above the 1.17264 next week, we turn overbought during the week, and the odds of reverting back inside the range are around 68-70%. And if you trade above this level, the odds of reverting back inside this range are around 95%. Very, very rarely do you actually push outside of those, especially if you don't have a catalyst. If you don't have a catalyst, you're unlikely to even get to those. So what I want to see next week is I want to see euro dollar pushing higher. You notice we were oversold on a rolling daily basis, and then we had to pause. That was down in this area, and then we pulled back. So what I'll be looking for next week is, you can see the moving average here. I'm going to be looking for this to cross over the moving average, and this would turn into a range reversal play. In the free strategy guide that we give you guys, you'll know, if you break back above the moving average, the opportunity comes to trade back down towards the moving average. That's kind of the midpoint of the range. Then you kind of have a battle, and then usually extend down, and then you go back, etc., etc. So you can see the underside here marked of that major breakout level. If we can push above the 1.17264 next week, this is where I'm going to be looking for a short opportunity for 1 or 2 days, and preferably I always try to short above resistance, because if I can get in just above resistance and it blasts through like this, then usually when this pulls back and retests, I can be out for break even. If I get involved under key area of resistance for a short, usually you're going to have to scratch it when it actually tests resistance. You're going to pay a bit of a premium if you chase that. So I always like to short above resistance. That's exactly where I'm going to be looking for a 1 or 2 day reversal back inside the range next week in euro dollar. Great setup if we can get it next week. Next is pound dollar. Looking at the multi charts once again. Now you can see on the 4-hour time horizon, the 1-hour time horizon, not much is going on. We're just chopping around. We're ranging, oscillating around the moving average of the 50-period moving average. But overall, we are in a bigger range, denoted by this high, this failed high up here, and this low down here. So I do anticipate pound dollar coming down to the 1.34398. Now going into next week, to the upside, the pound is actually a currency I'm kind of interested in, because last week we had the Bank of England, and it was a pretty hawkish vote, and they are talking about 3 more rate hikes this year, which actually, relative to some of its peers, like the US, for example, which only looking at 1 rate cut, it's actually quite aggressive. It's pretty hawkish. So I do anticipate after last week, the pound to perhaps hold up better than some of the other EU majors. All of the EU currencies tend to underperform in inflationary regimes, but I suspect that the pound will hold up a little bit better next week and maybe in subsequent weeks, because of how aggressive the BOE are compared to other central banks. So notice here as well, we actually already attempted to reclaim the 50-period moving average and haven't. However, I wouldn't really want to buy pound dollar down at the lows. What I would like is for pound dollar to actually break back above the 50-period moving average. Notice how price over here is oscillating around the 50-period moving average, same over here. I'd like to see this kind of a move back through the 50-period moving average, and this is where, just as the DXY sells off, this is where I'd actually still be looking for a potential short next week in pound dollar. So let's jump over to HedgeDash and look at the buy and sell zones for next week. So again, in this case, it would be a range reversal play, because the moving average would flatten and we'd break above it, pushing into the sell zone. And there's a really nice key area of resistance in the daily time frame. You can use the 4-hour time frame if you don't have a key area of resistance in the daily time frame, but obviously daily resistance will be stronger than 4-hour resistance. Weekly resistance will be stronger than daily resistance, etc., etc. So I usually look for daily swing highs and swing lows to trade from, but I will drop down to 4-hour swing highs and swing lows if there isn't a nice daily support or resistance in the buy or sell zone to use. In this case, we do have a really nice daily resistance area. So this actually elevates this setup somewhat. If we can get a strengthening of the pound versus the dollar next week, because the dollar is pulling back to try and reclaim that 50-period moving average, that is going to set up a nice opportunity. So we have a daily key area of resistance in the sell zone. It's actually kind of halfway as well, so that would be quite a deep test of the sell zone. So all in all, this actually is a pretty good setup as well heading into next week if we can get it. So I'm going to be looking for a failed breakout to the upside above the 1.3574. And as traders step in next week and buy, I'm going to be looking to short above this area, take the other side of that trade, and I'll be looking for this to roll back over down towards the moving average back inside the range for a short opportunity next week. Okay, moving on to US dollar Japanese yen. Now, US dollar Japanese yen is actually a market I like to the upside. We've had the BOJ, we had FOMC, they are now out of the way, and we are free to continue trading this to the upside. So what I like about US dollar yen is that we do have a really nice key area of support, as we're going to see when we jump over to the buy and sell zones, and this key area of support is right in the buy zone next week. This green level is where I previously highlighted the breakout for you to look for long opportunities above this. You can see we've now closed back down below the 10 period moving average, so the momentum has come out of this. And this is why I do look at breakout stuff, because if something is breaking out strongly, you definitely don't want to be on the other side of it. But generally speaking, breakouts will work better in gold, silver, oil. I mean, compare this to the breakout we saw, last week in silver and gold to the downside. They will always pay you better commodities with breakout strategies, and Forex will almost certainly always pay you better with mean reversion strategies. That's why we're looking at the setups in today's video that we're looking at. They're all mean reversion. So in this case, what I'd like to see is I'd like to see US dollar Japanese yen pulling back. Notice how this is where reading candlesticks can be really helpful, because not only do you see this with moving averages, but look at the breakout of this trend line. We break out and then sellers start to come in, and look at the wicks on this candle. They attempt to reclaim that trend line twice and they fail. And then they get liquidated above the highs. And look at the momentum candle showing you that that breakout level there is the correct level, because you get momentum, stop losses get liquidated through that. So going into next week, I am primarily, and it's worth noting, we actually have exactly the same setup on the monthly time horizon. So notice this, we're now pushing through the highs over here. And look at how that materialized over here. That does 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, that does point to potentially, to the upside for the rest of the year. So very straightforward opportunity for me next week in US dollar yen. I'd like to see this come back down. Most Forex setups are range plays, because Forex is chopping around most of the time. So I'd like to see this break down below its moving average, enter the buy zone, which starts at the 156.97. And this is the daily key area of support that I'll be using to try and time a 1 or 2 day reversal back inside the range towards the moving average. Don't forget, when you have inflation, the US dollar goes up and the Japanese yen suffers. And when you have disinflation, inflation is coming down, this is when you get the dollar selling off and the Japanese yen benefiting. So right now, inflation regime, this is fundamentally bullish as well for US dollar yen. So we're overlaying a technical setup onto the fundamental outlook. Next is US dollar CAD. Now, US dollar CAD is also setting up really nicely next week for a potential range play, and I'll show you why. On balance, I will prefer to short the US dollar versus the CAD. Now, in terms of portfolio selection, you have to remember both the US dollar and the Canadian dollar. These are the two currencies which are going to benefit the most from a higher crude oil price. When you get two strong currencies, they tend to range and just chop around. So what I like about this is, I know this looks like we've got a ton of things going on here, but there's only a few things here. It just looks a little bit like there's lots of stuff going on. But we have the monthly key area of support, and we have the monthly 50 period moving average, which is held twice. First month it held, second month it held. Now overall, so that is actually pretty good support to the downside, but overall, you can see since 2025, we've actually been inside this kind of almost descending triangle, but we've also started to form a higher low and a higher low here in the daily time horizon. Now, what you'll see going into next week is these levels here, these blue levels right here, these are simply the buy zones and the sell zone levels from Hedge Dash, which I've just placed on here manually. And I've done that because I wanted to show you how nicely they intersect with the other key areas of support and resistance in US dollar CAD next week. So we've broken above the 50 period moving average. You're coming back attempting to reclaim it. What I would like to see is the US dollar pushing higher. Now, this is a real if-then process in US dollar CAD next week, because if US dollar CAD rallies, I'll probably look to sell it because two strong currencies should hold their range. And if US dollar CAD sells off, I'll probably be looking to buy it because again, two strong currencies should hold their range. So to the upside, you can see the sell zone at the 1.3809. And what I really like about this is if we trade through the sell zone, we immediately run into this large descending trend line. We have the underside of this candle over here, which is like a key area of support, which I've also highlighted in HedgeDash, which we'll look at in a second. But we have this trifecta of confluence. This is what we talk about. Can we get 3 pieces of confluence on a trade? If we can, generally speaking, we're looking at an A-star setup, especially if the portfolio selection is there as well. In other words, this is a range play, and we expect, based on portfolio selection, the US dollar and the Canadian dollar to range against each other. So any push above the 1.38095 and into this area here, where the underside of support intersects with the major downward sloping trend line, this is going to be a fantastic place, in my opinion, to look for a 1 or 2 day reversal back inside this kind of triangle pattern which is forming. Now to the other side, and you can see it's just under here in the daily time frame. That's the kind of broken support, comes back, retests as resistance I'm looking to short from next week. Now on the other side, if we get, and the reason I would consider this as well is because we've held the 50 period moving average for 2 months here. But if we get a sell-off and we start to see the DXY, so this is where you start to get in the realms of potentially getting a setup both ways. Because if the dollar sells off, yes, we can look at US dollar CAD, but we could also step in and short euro dollar or short pound dollar. But what if the dollar actually rallies next week and we don't necessarily get the chance to sell the rip in euro dollar or pound dollar? Well, in that scenario, US dollar CAD should also rally, and that's where we can shift gears and look for a US dollar CAD range play instead. So this is why you tend to get setups, you know, pretty much every week. In fact, you do get setups every single week. So if we sell off, and we trade below the 1.36068, what's going to happen is I'm going to get an alert in HedgeDash to say US dollar CAD has turned oversold this week. And when I come down and look at this, I'll be able to see this is right at the ascending channel line as well. So from here, I would be looking for a bounce back up towards the moving averages, which is just kind of crisscrossing at the moment. And that would be the opportunity to the upside, playing the bottom of this pattern in US dollar CAD next week. Very quickly in HedgeDash, here's the underside of broken support turning resistance. I'm looking to initiate a potential short from next week in the sell zone. And here is that kind of ascending channel line. And notice the moving average is kind of in the middle both ways. So again, these are just range reversal plays back towards the moving average next week. Next is US dollar Swiss franc. Now US dollar Swiss franc is holding on the intraday chart its 50 period moving average. And what's interesting is we have a big descending triangle pattern and we've broken through the underside of that pattern, but then we've started to reclaim it. So that crude oil spike may have actually formed a bear trap in US dollar Swiss franc because we closed back above the breakout level last week. So, you know, you have these significant pattern breakouts. You should not really be closing back inside that pattern boundary. If you do, it's kind of a little bit loose. So I will be looking potentially for an opportunity both ways in US dollar Swiss franc. It does actually look like, so here's another opportunity where we can range play it, because if we push up, and notice here, by the way, in the weekly time horizon, we closed above the 20 period moving average. Very often when that happens, you start to make your way to the next moving average, which is the 50 period moving average, and look at where that sits in US dollar franc next week. It sits right at the descending triangle boundary line, and I've put on the sell zone for you next week from HedgeDash at the 0.7983. So any push in this area I will consider, because we've got the moving average, the sell zone, and this descending channel line. I will consider a potential short back towards the moving average for 1 or 2 day reversal. And if we break down and we trade below the buy zone, the 0.78017, you know, in terms of portfolio selection, US dollar franc should go up because the US dollar benefits more from inflation than the Swiss franc. And last week we had the SMB, and they reiterated the fact that if the Swiss franc continues to strengthen, they are going to intervene in the Swiss franc. And now we're seeing quantitatively the Swiss franc weakening because of that. So I do like US dollar franc to the upside you know, in terms of portfolio selection. The only problem I have with it is if we trade into the buy zone, the only real support we have are these moving averages, because there's nothing else really down here. We'd have to come all the way maybe down to this low where, you know, we can have really solid, you know, weekly support. So this would be a kind of move back into the moving averages and kind of a range play as well. Not as good a setup as the others. And if we just jump over to Hedge Dash quickly, you can see if we did pull back down, you know, the moving averages would be the support below the 0.780169. But probably this type 1 support level would be the best one to try and time any long position from, because if we test this and bounce, great, you get paid. If we break through, especially if we hit the second lower bound, there's a good chance this will pull back and this would be a break-even trade. So I am potentially going to look to trade US dollar franc both ways because it is kind of range bound still, but I do think there are better dollar pairs to be trading next week. Next is New Zealand dollar. Now, previously I highlighted this pattern for you, this kind of pennant or kind of symmetrical triangle type pattern. And look at where we came to. I highlighted the target to the downside of the 0.57802. And these, by the way, are the same type of patterns that are setting up in Bitcoin and Ethereum. So I'm going to show you those patterns and I'm going to show you the technical targets to the downside. But when we look at those, just keep this in mind because this type of pattern you can see worked out almost perfectly in New Zealand dollar. However, going into next week, you can see last week we attempted to reclaim the moving averages and we even closed back down, by the looks of it, below the 20 period moving average perhaps. Maybe we just closed above it, but we certainly closed back down below the 10 and the 50. So I would be hopefully looking for another push higher, another attempt to reclaim these moving averages. Because look at this on the monthly. We now actually are in the middle of a significant down month in New Zealand dollar. I really do not want to be stepping in front of this because we're also in an overall downtrend. So any kind of push up into this area once again through the moving averages in the daily time horizon, this is going to be an area where I'm going to be looking for potential short in New Zealand dollar. And if we jump over to Hedge Dash, you can see this prior type 1 resistance, the 0.59643, sits right inside the sell zone next week. So it'd be a break back above the moving average, like I said, turns into a range play. But it's a range play in an overall bearish market, and we have a kind of bearish bias more or less on the New Zealand dollar over the next few weeks and a bullish bias on the US dollar. So any pullback is essentially, we'd be looking at that like a mispricing. We'd be saying this market should on balance be going lower. The fact that it's popped up gives us that opportunity to short in that overall direction. So that is the opportunity I'm going to be looking for next week. I do think euro dollar, pound dollar, and New Zealand dollar are some of the best short opportunities in the dollar pairs next week, although I do really like US dollar CAD as well. And finally, we have Aussie dollar. Now we're starting on Hedge Dash this time because I want to show you how this is just in a range. Both of these currencies are benefiting from an inflationary regime, and actually the Australian dollar is one of my top longs heading into next week. Now we're going to move on to the non-US dollar pairs. You'll see a bunch of these are Aussie long plays. So what I like about this is this gives us options next week because I don't really want to be shorting the dollar. If I am going to short the dollar, I would rather it be versus the Aussie or the Canadian dollar or another commodity currency which is benefiting from this inflation regime. So the US dollar, not a commodity currency per se, but it benefits from the inflation regime via yields. And therefore, you know, against the Aussie or the CAD, the dollar should hold its range. So if we get that US dollar strength, then we can switch to the commodity currencies and say, okay, we don't really want to sell the dollar, but we can potentially range play the US dollar by shorting it against another strong currency like the Aussie or another strong currency like the Canadian dollar. So if we get dollar strength next week, I would anticipate Aussie dollar pushing down. This is the low, which sits in the buy zone at 0.6898. And I would consider buying this on the dip purely because of the strength of the Aussie, even though I also like US dollar longs next week. So whether the dollar goes up next week or down, there's a very good chance we're going to get opportunities to trade it. And if we quickly jump over to the multi-charts, you can see that we're actually in a range here. We failed at the high, and it looks like we're coming back down to the low. We haven't actually traded or tested the 50 period moving average. You can see this is a pretty strong market. And in fact, the key area of support down here is last month's low. So we're almost making the statement, if we sell off next week and take out last month's low, we will actually be forming an engulfing candle And generally speaking, you know, the monthly low has a good chance of holding at least for a few days. So if we get dollar strength, even though I'm overall looking to buy dollars, I will consider a dollar short, but versus the commodity currency of the Australian dollar or the US dollar CAD pair. Okay, so let's have a quick look at Bitcoin and Ethereum. Now, Bitcoin and Ethereum are both stuck in ranges. However, there is a really nice setup, especially in Bitcoin, that I like. So we have this pattern developing. It is this triangle pattern. And you can see we are ranging in the 4-hour time frame below the moving averages. We actually broke back down below them, and now we're consolidating underneath them with this kind of symmetrical triangle pattern. Now, what's really interesting in this is in the 1-hour time frame, the 68.81289, that is the pattern breakout. You could maybe get an early breakout, you know, down here, and a pullback and a retest of the underside of the pattern boundary before the bigger breakout. But a break of this low is going to set up, if we take the mouth of the triangle, a technical target of the 66007. Now, what I really like about this technical target and this pattern is that sits right at the channel low, which extends all the way back to February. You can see we tested here, here, here. And so now we've broken back down below the 50 period moving average in the 4 hours. This suggests we are heading lower, and now we've got an actual pattern which can generate us a target, and that target sits right at the channel boundary bottom around the 66,000, let's say. So a really nice technical setup in Bitcoin. Keep an eye on this chart, because if we start to break out, first of all, of the pattern boundary, and then the second place would be the pattern low, this is going to open up the 66,000, which is also right at this upward sloping trend line. But it is chopping around, and this needs to break first before anybody looks at any shorts. Next is Ethereum. Now, we also have a very similar pattern, and in Ethereum, we have this kind of overshoot. We kind of pushed through the 50 period moving average in the daily, and we've reclaimed it. And this has formed a pin candle from the 10 EMA in the weekly. So when you get that kind of candle, very often you get follow through to the downside. So what I like about this is we've got the pattern. The pattern target sits at the 2000.021, and that's just by taking the mouth of the target of the pattern and projecting it lower. But again, you would need a breakout first and foremost of the pattern boundary, but certainly a break of the 2098. That opens the door to a move down to the 2000 mark in Ethereum. So I do think ultimately we're going to come back down to the lows, but specifically for next week, that 2021 level, if we can get this pattern breakout, is looking like a really solid target to the downside. Okay, so quick look at the overall portfolio selection and the quantitative analytics in HedgeDash. One thing I will note is we are overbought on a monthly rolling basis in the Aussie, and that usually means we need to pull back for a month or so. We're now seeing gold selling off because of the breakout, which we had last week, which I highlighted for you before it happened last week. Because of that, we may actually start to see a weakening of the Australian dollar in the weeks to come. But specifically for next week, it's still strong enough to be a good buy the dip opportunity where we can find it. So just something to note, the currencies I liked alongside this week are the Aussie, the pound, and the CAD. However, the US dollar is kind of bearish, but it's getting stronger. The momentum is this way. And we know that it's coming from a very low position in the scorecards. It was down here quantitatively. And I do anticipate, because this is moving up the scorecards on the back of a catalyst, I anticipate the US dollar to continue making its way up. So yes, this is why I'm kind of prepared if we get the opportunity to maybe short the US dollar versus the Swiss franc, or short the US dollar versus the CAD. Because although it is something I want to be long, it's kind of still in its early stages. And against some of the other stronger currencies, it can still sell off or range. So I do like the US dollar really as my third best currency next week. You know, the pound, it is getting a little bit of an uptick because of the response to the Bank of England. But generally speaking, you know, I prefer the Aussie, the CAD as the commodity currencies, and then also the other currency which benefits from a higher oil price. So the pound out of all the EU majors is perhaps the best. But I still prefer, you know, long Aussie, long CAD, and just generally speaking, long the US dollar, which are all standing to benefit from higher crude oil prices. So out of the EU majors to the short side, you know, in a way, this can just be something where I say, I don't really want to short the pound. If I'm going to short anything, I'd rather short the euro versus the US dollar. I'd rather short the New Zealand versus the US dollar. I'd rather short the yen by buying US dollar yen, right? They would be my preferable currency pairs next week. But if the pound does trade into its upper bound and test that key area of resistance, you know, I might be interested in adding it to a short if I've got a couple of other shorts open. So that's really how I see this, or how I read the scores coming into this week. To the short side, we're looking at the Swiss franc, we're looking at Japanese yen, which tends to suffer in inflation. And alongside that, you know, the New Zealand dollar and the euro, you could probably look at both of those to the downside as well. Out of the two, I think I prefer New Zealand dollar for a short. So that's what I see. Basically, US dollar, CAD, and Aussie are the three top long themes. And then in the other currencies, you know, the Swiss franc, the Japanese yen, the New Zealand dollar, and the euro are the top shorts next week that I'm looking at. Okay, so let's run through the non-US dollar opportunities that I really like next week. Aussie yen, commodity currency versus the Japanese yen, which suffers from inflation. Aussie franc, Aussie commodity currency, one of the leading currencies going into next week, versus the Swiss franc, which sold off and is weakening because of the prospect of SMB intervention. Then we have the CAD yen pair, which is crude oil supported CAD versus a weakening Japanese yen as crude oil goes up. Pound yen, we've basically got, you know, the stronger of the EU currencies in the pound versus the inflationary suffering yen. And then we have to the short side EurAusd, and we have New Zealand CAD to the short side as well. So starting with Aussie yen, I would like to see Aussie yen pull back. This will turn into a range reversal play, but I'm buying the bottom of the range. You can see this is the #1 ranking pair, and this is the key area of support in the buy zone that I really like next week, the 109.58. Not only is this a really nice type 1 support for a 1 or 2 day reversal back inside the range next week, but if I jump over to the multi-charts, you can see this sits right at the weekly 10 EMA and it sits right at the daily 50 EMA. So a really nice area to buy the dip in Aussie yen, in my opinion, next week. Next is Aussie franc. I can only be a buyer or do nothing next week. We've started to break down below the 50 period moving average, so it looks like we're coming down to the bottom of this channel. You can see the bottom of this channel is actually sitting also at the 50 period EMA in the daily time horizon. So this is also a really nice setup next week, because if we can continue to push down, we're going to push into the buy zone, which starts at the 0.5475, into the bottom of the channel, and we would also most likely be pushing into and testing the 50 period EMA in the daily, looking for that 1 or 2 day bounce from this area next week. Next is CAD yen. Now I am interested in a potential buy the dip opportunity in CAD yen to the upside, but it's not as strong as some of the other setups we've looked at. Some of the other setups, we've got multiple key areas of resistance and support. Here we do have dynamic support in the daily because the 50 period moving average is at the 114,470 and the buy zone starts at the 114,55. So if we push down into this area next week, I will be looking for a potential bounce, looking for a 1 or 2 day reversal back inside the range. It would also be a bounce more or less from 1 to the 3 week high, and that probably would be your best place to actually look for a key area of support is at the 3 week high, which actually sits right there. So that would be the area I'd be looking for a bounce next week in CAD yen. But there are other pairs that we've looked at that have much stronger key areas of support or resistance, you know, in the buy zone or the sell zone. But it is an opportunity and it is on my watch list and I will be watching it. Next is pound yen. Now I'm throwing this in there. It's not as good as some of the other setups we've looked at, but it is on my watch list. I am going to keep an eye on it. And this is simply a range reversal play. We're crisscrossing the moving average. I'd like to see it enter the buy zone, which starts at the 209.49. And we have a really nice type 1 support in the daily right here, where I'll be looking for a 1 or 2 day bounce back inside the range towards the moving average. And just to give it a bit of context, this would essentially be trading down below its 50 period moving average into this key area of support. And in this case as well, into the 20 period weekly moving average. So that's where I'll be looking for a 1 or 2 day bounce in pound yen. I do think it's one of the weaker of the setups, but who knows where the opportunities will come next week. I do think this is worth having on your watch list nonetheless. Next is EurAusd. Very straightforward. We've been in a big downtrend. We're now breaking back above the moving average, so it's going into a ranging mode. And this is not surprising because we need to pause on a rolling weekly basis. But I would be looking for a push up into the sell zone, which starts at the 1.6672. And the type 1 resistance in the daily chart sits at the 1.6746. So this is a really nice setup. And again, a bit of context in the bigger picture, this would be trading into the 10 EMA in the weekly. So looking for a 10 EMA bounce in the weekly and a 50 period moving average bounce in the daily. They intersect right there. So I really do like this for a potential short in EurAud next week if we can get there. And finally, before we move on to the commodities, New Zealand CAD, I can be short or do nothing. I cannot buy this market under any circumstances. I'd like to see it breaking above the moving average, turning into a range and breaching the upper bound at the 0.8106. Then we turn overbought during the week. And there's a really nice underside stair step. So this is a type 2 resistance. Again, we go through all that in the strategy guide below. But that would be the area I'd be looking for a rejection and a 1 or 2 day reversal back inside the range. Just for context, that would be a push on a weekly basis to try and reclaim the 50 period moving average once again. And the underside is actually the underside of that weekly candle there. So that is where I'll be looking for a 1 or 2 day reversal next week if we can get there in New Zealand CAD. Next is crude oil before moving on to gold and silver. Now we can look at crude oil both ways for a breakout or a pullback, but it's only a buy opportunity in my opinion. In Hedge Dash, you can see the pull away from the moving average. This sets up a dip and flip. So it's a trending market, dip and flip setup into the moving average. Because it's pretty volatile, perhaps we test the low at the 76.73. This would be where I'd be looking for a bounce back inside the range for 1 or 2 days next week if we get there in crude oil. But also because it's a commodity, breakout strategies do work very well. And in fact, this was the breakout point I highlighted when we had that initial catalyst right at 67.36 and we broke through it and we've had a very, very strong rally. And notice I said to you at the time, this was before the gap up. Once we break through here, if you trail the moving average, the 10 EMA, you would still be in this trade. So if you took profit, you know, on the blow off top over here, that would have been good. But obviously if you didn't, you would still be in this trade. So this is still bullish. We're still kind of moving along the 50 EMA and now we have this consolidation. So if we don't pull back, if we hold, the breakout level, the next breakout level is the 102.15, which is the top of this pattern over here. If we break through here, this is where you can start to look for a continuation to the upside. First and foremost to the prior high, and then after that we have the monthly resistance, the 12412. Wrapping up the video with gold and silver. Now last week I did highlight gold and silver to the downside with these patterns, and this was the pattern I identified, this descending triangle, and this was the breakout level I highlighted for you last week. We started the week right here, and as soon as we broke it, look at this liquidation. Really strong liquidation right down to the target set from last week's video at the 4573.29. So the move, generally speaking, is over. We closed the week below the 20 period moving average, so I do think we're coming further down. However, at this point, we're probably chasing the move. So I suspect to open the week, we're probably going to push down into the 4,402, but it is the end of the move. I would much rather wait in the 4-hour time frame for this to pull back towards its 20 EMA and the 50 EMA, and this would be the next opportunity to look for a reshort. So at the moment, I do think we're coming down to the significant low over here, but wait for 1 or 2 days pullback. That's going to give you your best risk to reward down to that level, because the juiciest part of this move has already transpired and the target has been taken out. And last but not least, we have silver. So I do have a bearish buy still on silver. This was the pattern I highlighted for you last week, and this was the breakout level I identified in last week's video, the 79.817. We broke it, we consolidated underneath it, and then we just sold off, and we ended with a bit of a capitulation low down here, but only a short-term one. So I do anticipate in the 4 hours a pullback, possibly a consolidation under the 71.34, because this was the range low between these levels. And we do have an overall target to the downside of 59.44, but we also have this significant weekly support level at the 64.017. So this is no longer as good an opportunity as it was, but if we do get a pullback to the 71.34, look for a move back down to the key support in the weekly time frame at the 64.01 next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.